Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Federal Bank. Our analyst maintains buy rating on Federal Bank with a price target of Rs 170. Federal Bank reported strong business performance in Q2 of FY24 in terms of loan growth as well as deposit growth. Near-term business trends look comfortable for the bank except NIMs, and the franchise is looking for some more predictable performance. The bank has a strong granular liability franchise with retail deposits making up 82% of overall deposit, and asset quality outlook continues to remain stable to positive. Thus, reversal in return ratios and growth is unlikely. The bank is likely to sustain ROF over 1.2%, led by strong loan growth, healthy fee income, and benign credit cost, despite NIM's pressure in near term, which should translate into normalized ROE of 15%. Valuation are reasonable for such ROE trajectory. Potential value unlocking in FEDERALBNK, which is the NBFC subsidiary, via an IPO is likely in near term as suggested by media reports. At the current market price, the stock currently trades at 1.2 times its FY24 book value and 1.1 times its FY25 estimated book value, which we believe is reasonable. The stock has outperformed the broader indices in last 12 months. Next, we have an update on Indian Hotels Company. Analyst maintains buy rating on Indian Hotels Company with a revised price target of Rs 492. FY24 has been eventful with G20 summit driving strong room demand even in a weak Q2. While Cricket World Cup in October-November 23 followed by festive season will boost room demand in a seasonally strong Q3. What lies ahead? After an eventful FY24, Indian hotels industry has good room for growth, with foreign tourist arrivals recovering to 56% of pre-COVID levels and domestic tourism recovering to 75% of pre-COVID levels. Higher revenue per available room and focus on asset-light business model will consistently drive profitability and cash flows for Indian hotels, eyeing FY25 EBITDA margin of 33% in the coming years. Stock is valued at 22 times FY24, 19 times FY25 and 16 times FY26 estimated EV by EBITDA. Good earnings growth visibility with structural growth story of hotel industry is intact. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.